Hey, welcome to another episode of Spilling the Beans. I am up in Cleveland, Ohio, and hanging out for the summer. And I got Cam and Q and a whole bunch of folks up here shooting a bunch of content, doing some Legacy Wealth Academy episodes. Check that out, lwacademy.com. It's $9.95 a month for digital master classes on all these different asset classes and investment strategies, cryptocurrency, e-commerce, real estate, commercial real estate, residential real estate, you name it. And one of the people who's up here actually filming for that is Jeff Lubin. So Jeff Lubin's a member of Legacy Family, my mastermind, and he is a year out of school and a rock star genius when it comes to cryptocurrency and NFTs. So if you have your just mind is blown trying to wrap your head around what is cryptocurrency, what is the blockchain technology, what are NFTs, what is the metaverse. He's going to break a lot of that down in the episode in his masterclass for Legacy Wealth Academy. So definitely check that out. But I want to sit down with him. I'm trying to wrap my head around this stuff. So let's go grab coffee and ask him a couple questions about the crypto industry, where it's been, where it is now, and where it's going. Jeff, what's up, dude?
How's it going, man?
Hey, dude, welcome. So, all right, man, I know you, dude, you're a savant when it comes to cryptocurrency, NFTs, all this kind of stuff. And I'm excited for the crypto course that you're putting in Legacy Wealth Academy, too, personally, to check that stuff out, because I need to get educated on this even further. I think crypto is a big market mover. I think it's the future of banking, which we've been talking about, and really just the future of finance. And so the goal of me and you sitting down right now on Spill the Beans is I want to make this super simple for people to understand of like what is crypto, how can they get into it, right, at an entry level, and then what do you see as kind of like a future, Okay. So tell me a little bit about how did you get into this in the first place, right? You just graduated from college, from Florida originally, right? And then came up here to Northeast Ohio, graduated from Akron just last summer?
Yep, last spring.
So tell me a little bit about like, what have you been doing, dude? How did you get into crypto? Was it just like you and your boys hanging out and you're like, this is interesting, I'm gonna pay attention, I'm gonna play around with this? Or have you actually like formally studied it, like School of Hard Knocks, or like what? Tell me about your story.
So really, when I came up here from Florida, I came to play football. So I was at Akron playing football for about 4 years. And that's kind of where I found about real estate. I found out about real estate because I was trying to find something else to do. And I wanted to be a real estate agent at first because I was just watching HGTV constantly every day. And I just wanted to be like a $1 million realtor. So I sold these big homes. But that wasn't really it in Ohio, because if you know Ohio or Cleveland or Akron, they don't really have those type of homes in those areas.
Yeah. You're like, I'm gonna make these big rips on these multi-million-dollar sales. And
Exactly.
You're like, well, not that big of a rip on a $120,000 house.
Exactly. So I knew that wasn't for me. Then I wanted to go on the investment side, but I didn't have no money, no cash. I didn't have no credit because I was just in college. So I knew that wasn't gonna be my route. But I was just on YouTube scrolling and I found Max Maxwell actually.
Yeah.
And he told me about wholesaling.
Yeah.
I'm like, what is this? You can get into real estate with no money, no cash. I was like, perfect, man, because I don't have nothing.
Yeah.
So I started
speaking my language.
So I got started wholesaling. I ended up getting my first deal within like 2 or 3 weeks of me getting started. And once I got my first check, it was about $1,500. I just knew like the concept worked. So I was like, man, I'm going to
proof of concept, man. Dude, that believability from that first deal, dude, just sets your sights long term.
Exactly, because at first when you watch it on YouTube, you don't really know if you can do it or if it's real, if it's legit. But when I got that first check in my hand, I'm like, man, I really got to take action and really put some effort into this, because if I do, I know where it can take me.
Yeah.
So I started wholesaling, done a couple of deals. Then I found Pace Morby, who showed me about creative financing.
Yeah, good buddy.
Once he showed me about that, my life completely changed. Like creative financing really helped me a lot. But that's basically my whole like journey into real estate. How I found cryptocurrency was.
And then did you get introduced to me by Pace?
I got introduced to you by somebody in the Pace program.
Okay.
So they introduced me to you because I wanted to learn more about multifamily. And the whole concept of owning buildings that has a lot of units attached to it, that really resonated with me, because if I can do it with a single family house, I can do it with multifamily as well. So a 30 unit, a 60 unit, and I can apply the same principles that he taught as far as creative financing and apply it to bigger units.
Yeah.
It's the same work.
I'm doing a deal right now, creative finance deal with Pace on 100 doors in Louisiana right now.
It's crazy.
It's a
crazy.
beautiful thing. If you understand how to source deals and you understand creative financing and how to raise money or creatively structure,
Exactly.
dude, you can do limitless number of deals.
So one thing that you both taught me was just to be a problem solver. So whenever you see a problem, whenever you see a seller that has a certain issue, sometimes people don't want to pay taxes. Sometimes people, are behind on their mortgage. There's creative ways to structure those deals that can benefit both of us. So once I learned that, it was like, man, it really changed my mind and changed the way I think. Just how can I solve this problem?
Yeah.
And that's why I really fell in love with cryptocurrency, just because crypto solves a big problem that people don't really understand. Right now, in certain areas, like if you were to send a wire or if you wanted to send money on a Sunday, you can't do it. Right. So that's why I believe in cryptocurrency so much, and that's why I believe in being bankless and not having to rely on anybody, because just like it's my money, I want to be able to use it when I want, how I want, wherever I want.
And it's like, yeah, dude, you want to send a wire on a Sunday, guess what? You can't do it. Well,
can't
in
do it.
crypto, you can instantaneously transfer, and the bank's not floating your money for 3 days, 4 days in an ACH payment.
Exactly.
Trying to make money off of your money because they're all scoundrels, right?
Exactly.
It's like, dude, cryptocurrency it gets rid of all the bureaucracy in that space.
Exactly.
And allows you to transact in real time without all the regulation, right?
And it's completely transparent. So you can literally go on the blockchain and just look up all the different transactions and see where your money is going.
Right.
There is no middleman. There is no, we don't really know about this loan, or you don't know if you're gonna get approved. There's no appraisals. There's nothing in cryptocurrency that you can do that with a third party, basically.
It's all proven, right?
It's all proven.
Yeah.
That's why I love it so much. That's why I believe everybody should honestly learn how to become more bankless, because it's gonna be the future.
Yeah.
Right.
Might as well do it sooner than later.
Exactly.
So what do you think about, or when did you start getting into crypto in the first place?
So I got into crypto in 2018. I found out about it through Dogecoin.
So that was like the original, was that 2017, 2018 that did the original run up?
Yep.
When Bitcoin went to about 20 grand?
Yep.
And then it dropped back down, right,
Exactly.
for a few years. And so Dogecoin comes out, which like usually doesn't have a very good reputation, right? It's
No.
like a fake coin or
Yeah.
whatever. But a lot of people made a lot of money on it.
Exactly.
And
It's
then,
one of those meme coins that people
Yeah.
invest in, trying to be a million overnight. And
Yeah.
that's pretty much how I
Yeah.
was seeing Dogecoin, was to be
Yeah.
a million overnight.
Yeah.
But learning about it, I pretty much got my foot in the door. But once I actually learned the technology behind it, and once I learned the difference between a coin and a token, and the difference between a meme coin and something with actual utility, I was like, man, I really have to learn this technology, because this is gonna be the future, man.
Yeah.
This is gonna be the future.
Yeah.
So I just have to. I put in a lot of
So
effort
it's like,
into it.
I know this isn't going to be the coin, but
Yeah.
I understand the technology behind it.
Exactly.
And this is going to be the future, the whole cryptocurrency world and really blockchain technology.
Exactly. It's innovative, man. That's why I love it so much.
Yeah. So all right, so if somebody has never done anything with cryptocurrency, how would you explain this to somebody who doesn't know anything about crypto? You got some sixth grader walk up to you and say, what is cryptocurrency? How would you explain it to that 12-year-old kid?
I would just explain it as it's digital currency. That's pretty much all it is.
It's digital money.
It's digital money. That's all it is. People think Bitcoin should be something that we spend every single day. But if you really think about it, do you spend gold every day? No. It's a store of value. So Bitcoin is not something to be transacted with every single day. And I don't believe that. I think it's something that you buy and you hold, right? It's a store of value, so you store it with value, right? There's other tokens that have more utility. Bitcoin was one of the first that came out, so it's not going to have a lot of innovative stuff to come out, after. It's just
like Ethereum, right?
Exactly.
Like Ethereum's a platform that a lot of the other tokens are built on top of, so they have to utilize the Ethereum coin and token,
Exactly.
and so like that is something that will continue to grow in value as long as
Exactly.
things are still built on that platform.
Exactly. And that's why, there's a lot of I don't want to get too technical, but there's a lot of different L1s, which basically mean layer 1. So other blockchains that are trying to mimic Ethereum, like Solana, like Avalanche, those type of coins. But Ethereum for me it's like the granddaddy of crypto. Like Bitcoin and Ethereum are the granddaddies of crypto, in my opinion. That's why
And when you're first, man, usually you're around for a while, right?
Exactly. So
Yeah.
they went through the most cycles. Most currencies or most tokens don't go through every single cycle. So they have their bull run, they have their bear run, and then they're gone most of the time. Bitcoin and Ethereum, they're battle tested. They've been here for years, right? And they're here to stay.
Yeah, and there's still new tokens and new coins coming out that are built on
Ethereum.
the Ethereum network.
Exactly.
So it's like there's not a better technology necessarily, arguably, right? Then there's still a lot of utility to that, and that way it'll continue to grow because it's what people are most comfortable with. And all right, so if somebody wants to get into cryptocurrency, what would you say? Hey, like, how would you get started? Like, where do you even begin?
I would get them started learning about it first, because you never want to invest in anything that you don't know, right? I think there's some good platforms right now that would educate you, and I do have my course coming out very soon. But I really do believe that before you invest in anything, you should educate yourself first.
Yeah.
So what is a wallet? What is a centralized exchange versus a decentralized exchange? You have to know these things, because if you just have a Coinbase account and you just buy crypto on Coinbase and just leave it there, then you don't really own that currency. There's a saying in crypto that says, "Not your keys, not your crypto." So if you have your crypto on a different exchange that's not really attached to you, it's not really yours, right? So you need to know the difference between a wallet that's yours, so self custody, versus somebody else managing your assets. Same thing with the banks, right? You deposit your funds at a bank, you get what, 0.015% interest. You don't know what they do with your money or anything. The same thing with decentralized exchanges, right? You don't know what they're doing with your money. But when you really learn the technology, you begin to navigate yourself in a way where, okay, I'm going to be in control of my assets. I know where I'm depositing my assets. I know how much yield I'm getting on my assets. So if you're just getting started, I would go to YouTube University first. Figure out what a cryptocurrency is. Figure out the difference between a coin and a token. Because there's a lot of things right now people really don't understand about it. They just see Dogecoin is at 15 cents. I hope it goes to $1, right? And that's not the way to think about it. That's not the way to think about it.
That's gambling, dude. You're just rolling the dice, hoping things continue to go up in value, but not really buying with any rhyme or reason to it. You're rolling the dice, right? So, okay, so that explains what is cryptocurrency. How do you get started in cryptocurrency? I do believe, like, go and open up a Coinbase account, just like, I don't know, throw $1,000 at it, $100 at it, 10,000, whatever, like your, just, I don't know, start buying things, start looking at things, start looking at, the graphs and the charts and just learning about these things and reading white papers, like that's essentially a business model or like the business plan for each one of the coins. And there's a lot of different things that each coin can do. There's utility, like you said, of what these things can do, like what Cardano is, like smart contracts, right? So they're essentially creating, I think they're about to sign a deal with, either Dish Network or DirecTV or something in order, to have smart contracts, so that way nobody can ever skimp out on it or steal access to it or whatever. But there's a lot of things like that. I think an easy one is going to be the title business.
Oh my gosh.
Tracking title. Like, why do we even have title companies anymore when you can track title to a property and show exactly who the ownership is without having to even run title or worry about if somebody's got 1% ownership over here that can't be found? Like,
once
that's created, an industry that's gone, dude.
Once that's created, it's really going to change the game. There's, like, in cryptocurrency, like, the code is law. So it doesn't matter what anybody said. There's no, like, hey, man, I understand you're going into a situation. There's none of that. Whatever the code says goes, and that's it. That's why I love it so much, because if we really look at what's happening right now, like with Celsius, Three Arrows Capital, they're getting liquidated. They're going bankrupt, right? But if you look at who they paid out first, because they were being very risky, they paid out DeFi platforms. So decentralized platforms, they paid them out first. Because.
So what does that mean? Talk about decentralized. What does that mean?
So decentralization is basically saying that there's no one central point of entry. So there's no one person that owns it, one person or a group. Right. The community
which is why a lot of these rug pulls happen, because it's one person who controls all the coins. Right. For that type of coin. And as soon as they get a run up, they're like, fuck it, I'm going to sell all mine because I just made hundreds of millions, if not billions of dollars. And that's what a rug pull is. And when they put all those tokens or all those coins back on the market, the price drops
dramatically.
Yeah, but they took all their cash off the table. So you're saying that doesn't happen in a DeFi, right?
No.
A decentralized finance
No.
type
So
of coin.
when you take out loans in DeFi, you have to over collateralize. So you basically, if I put in $100,000 worth of Ethereum, I can only take out maybe 60 grand, right? And that's pretty much pushing it. So if the price of Ethereum were to drop, if I don't put more Ethereum in there, I'm going to get liquidated. So there is no, like, I'm going to call the bank and just kind of try to finesse it. There's nothing that you can really do. So if you're very risky with your assets, you can really lose your money, right? Because there's no middleman involved. It's only code. It's only code.
So, like, how are people making money, right? Like, there was a big run up in 2021.
Yeah.
Everybody, made a ton of money, cashed out, pulled out of the market in late 2021, and really things have tanked 60, 70, 80% across the board.
Across the board.
Over the course of the past 6 months. So how are people making money in this? Are they day trading? Or are they shorting the coin or what?
So there's different ways people make money. Trading is one of them. You can also...
Meaning you're buying low, trying to sell high, trying to time it.
That model doesn't work for most people because they don't know charts, they don't know technical analysis, they don't really know anything. They're just kind of trying to time it. And I really feel like when you do that, you're going to stress yourself out because you're going to be on the computer all day looking at the charts, seeing it's going up, it's going down, it's going up. The best way for most people is just a dollar cost average. So just put a little bit a day and you'll be good.
$10 a day. You got $300 over the course of a month.
Exactly.
You got $3,600 over the course of a year.
Exactly.
But you're buying high, you're buying low, you're dollar cost averaging.
Exactly.
And when it's expensive, you might be overpaying. But guess what? You're also buying when it's low, and you're going to average it all out. And over the course of time, you'll have a very good basis in that coin.
Exactly. So you don't want to stress yourself out too much.
Yeah.
When you're day trading, you're really going to be stressed out because you're trying to time the market, and you can never time the market.
Dude, I know people who day trade, and they're like, I'm in front of a computer 20 hours a day.
And it sucks.
Yeah, it's horrible, and it's super stressful. I'm like, dude, that sounds horrible.
Yeah.
You're making a bunch of money, but I would want nothing to do with that lifestyle.
Nothing at all.
Yeah.
So that's one way people are making money. The other way is through staking. So with staking, people don't really understand the model of staking. There's a lot of coins that you can stake that really have no use case to it. So with Ethereum, when they go to this proof of stake model, basically the revenue that they generate is going to go to the stakeholders, a portion of that. So right now, if we look at Ethereum, they're generating $3-4 million a day. When you stake Ethereum, that money is going to the stakers, the stakeholders.
It's essentially like a return on investment. It's a dividend on your coin.
Exactly, right? So you can do that. If you want to get really technical and advanced, you can rent out NFTs. There's so many different ways you can make money in crypto that people just don't know about.
Yeah.
It's just insane. Like if you're a real estate investor, if you have Bitcoin, you have Ethereum, you can take out loans to get against those assets, go buy real estate, refi that, and pay it back. So there's so many different ways you can get creative. You can use your Bitcoin, Ethereum as collateral. Instead of selling your assets, you can take out loans against it. Just like we do in real estate.
Yeah.
The same way.
Now, who are those lenders that would give you a loan against your Bitcoin? And do you have to give them, transfer the Bitcoin to them? Or can it be in your own wallet? Or does it have to be on some sort of platform?
I'm glad you asked that. So these platforms are called decentralized applications. So these platforms, one is called Aave, one is called Compound. You deposit your assets on the platform, but you still have control over it.
Okay.
And you earn staking rewards. So if you deposit, let's say you deposit 100 grand in Aave, you earn yield on that because they're taking that money as well and they're lending out to other individuals, right?
Like a bank.
Like a bank, right? But it's a crypto bank. So the revenue that they generate, it goes to the stakeholders of that coin, right?
And when you're staking, it's like getting a CD. Like if you go get a certificate of deposit at the bank, you're putting it up, they're going to give you a higher return in order to keep your money tied up with that bank for a certain amount of time.
Exactly.
And so when you're staking, you're essentially taking out a CD and saying, hey, I'm willing to leave my money tied up in this coin or on this platform for 12 months, 36 months, 60 months. And usually the longer you're willing to commit it, the higher yield that they're willing to give you on that coin, right?
So that's more of a centralized aspect of it. With this, there is no lockup period. So whenever I see lockups, that's a red flag for me.
Interesting, okay.
So there is no lockup periods. There are, before I get into the other platform more, like when you deposit your assets, you can withdraw at any time.
Okay.
Right? If you take out collateral against your assets, that's when it becomes a little bit more tricky. So you have to pay back your assets. So for example,
Right.
So that's really the only reason. And everything is code. Everything is in the code. So let's say, for example, they say your liquidation is at, if Bitcoin were to hit $15,000, you're gonna get liquidated. You know that, so you're very aware of that, so you know what's going on. So if it hits 16,000 or 15,999, you know you have to A, deposit more Bitcoin on that platform, or B, just get liquidated.
Meaning when they liquidate, they just say, hey, dude, here, take your money back, kind of a thing, at $15 per Bitcoin.
They're gonna sell your assets.
15,000.
They're gonna sell whatever you have deposited. They're gonna sell those assets until you can pay back the loan.
Got it.
So
because they're not going to give you a loan on something for $100,000 at $20,000 a Bitcoin.
Yeah.
and give you a loan for 50 grand, and all of a sudden it drops down.
Exactly.
They don't want to risk losing their money, right? They
Exactly.
want security. So it's good from a lender perspective
Yeah.
because you got a level of security, but because of the volatility, that's why that liquidation occurs.
Exactly. There is one platform called Alchemix that allows you to pay back with time. And what I mean by that is, let's say you deposit some assets on this platform, the loan pays itself back by staking rewards. So the only thing you have to do is pretty much wait for time. That's literally that's it. So 6 months, 12 months, you deposit your assets on here, you say, okay, I want 20 grand, right? They're gonna let you know how long it's gonna take for that loan to be repaid back, and it's gonna repay itself back. So now you basically have 20 grand that you can utilize to do whatever you want with it. So there's so many different platforms that people don't know about that is very innovative. So with Bitcoin, since it's on its own blockchain, they don't really have a lot of use cases for it, right? But there's a platform called Ren that allows two different blockchains to kind of talk to each other, right? So Bitcoin is its own platform and its own blockchain. Ethereum is its own blockchain. With Ren, it allows you to basically bridge your Bitcoin onto Ethereum so then you can use it for whatever decentralized platform you want to use it on.
Because usually it's all like Ethereum-based stuff only,
Yes.
and only those coins, and you can interact only with those on that
Exactly.
platform. Got it.
Exactly. So that's why I believe it's so innovative, and it's just so crazy on what you can do. Like with me, I haven't really paid for anything with my own cash in a very long time, right? I use crypto only, so I want to be 100% bankless very soon. But
How do you know who takes crypto and who doesn't?
they don't need to. If I have a credit card, I can use crypto to pay off my credit card. There
Like a Visa?
Yep.
How do you do
Visa, American Express. There's a platform called BitRefill. With that platform, basically it's going to credit whatever account number you give them. So if I have my American Express card and I go buy, I don't know, a shirt, and I say, I want to pay it back with my bank, I want to pay it back with crypto. They give me option of which cryptocurrency I want to utilize, and I can just pay it back. They're going to credit that account.
In real time, whatever the value is at that point.
Yep. So people don't even know about kind of the technology behind it. Like with Ledger, they're coming out with a CL card. Basically what that means is you can use your crypto in real time. So they're coming out with a Visa card.
I was going to say, why isn't there a credit card that's just based on crypto? So it's totally bankless.
Exactly. So there is one right now with crypto.com.
Okay.
So crypto.com, you can use your card and you can deposit, Ethereum, Bitcoin, whatever you want, and start to use that as currency as well.
And you don't have to transfer it to like crypto.com coin, right?
No. It can be Ethereum, it can be USDC. You can transfer on that platform, and the same goes for Coinbase. The reason why I like crypto.com more than Coinbase is because I can be on different blockchains and still transfer money there. With Coinbase, you can only do it on Ethereum and Polygon right now.
Yeah.
With crypto.com, I can have Arbitrum, Optimism. I can have Ethereum. I can have Polygon. I can have so many different blockchains. So if I have money on Arbitrum, I can send my Ethereum, I can send my USDC to crypto.com and be good, right? So that's why I love it so much. And they also have perks to do this, right? So if I wanted to get an Amazon gift card, I can literally buy it with crypto.
Yeah.
So as we grow, as we elevate, the technology is only going to get better and better. Because right now it's not that user-friendly. That's why I understand when people are afraid of it. It's not that user-friendly right now. But the internet wasn't either when it first came out, right? But it grows with time. Whenever somebody says that can't be done because the technology doesn't support it, that's not a really valid argument, because with time, technology always is going to evolve.
Yeah, for
Always.
sure. And do you think that there's risk in buying Ethereum or in holding money on Ethereum or Bitcoin because they are the grandparents? Do you think there's going to be a newer generation that's bigger, better, faster, more efficient, more effective in utilization, and those other two will essentially go away and go to zero?
No, I don't think those two would ever go away, because if you really think about it, a lot of these different layer ones are basically saying the reason why Ethereum sucks is because the high transaction fees. But when you have a lot of users, you're gonna have high transaction fees, right? And with their models that they're trying to do right now, they're trying to lower it and have more transactions per second, so those fees can go down.
Yeah.
People think that with this new model of proof of stake that it's gonna lower the transaction fees, but that's not what's gonna happen.
You're talking about gas fees, right?
Yeah, talking about gas fees. Yep, talking about gas fees. That's not gonna happen,
Yeah.
right? When you have to kind of have a medium. So do you
Dude,
want?
even if somebody new comes in, they're like, dude, if I realize that people are paying this much money on Ethereum for gas fees, I know I can charge just as much, maybe a little bit less, right? They're gonna do the same shit.
Exactly. So that's why with Solana goes down constantly. They go down constantly. It's not really decentralized. That's why I don't really interact on that platform. I'm not an Ethereum maximalist. I'm not a Bitcoin. I'm a decentralization maximalist. So I like that a lot.
Yeah.
Right. I like to be able to know that there's not one entity or one group or one corporation that can shut it down if they want to or do whatever.
For sure. No, I agree 100% with that. So let's talk about how does real estate intersect with cryptocurrency? Like we talked a little bit about title services and how I could definitely see that stuff moving along on the blockchain. What about like raising money, right? I feel like there's so much money, and this was like a big conversation amongst me and a bunch of other buddies over the course of the past years. Like there's so much money in cryptocurrency and people making millions, if not billions of dollars in crypto that then want to find a way to back it with something stable, right? Is there a way for somebody like me to go and create my own token where I can go and raise money from people with cryptocurrency, pay them a fixed return, like maybe have them stake for a certain number of years or whatever that is, or not stake or whatever, and I could take my, instead of me paying 5-6% to a bank to borrow the money, could I pay that to, essentially private money through the crypto realm?
So yes. So if you do it the route as private money, then yes. If it's a small select of individuals that have just a lot of money, then yes. But when you start saying, okay, guys, I'm going to buy this 100-unit building, let's
syndicate
and tokenize it. That's when you get the SEC involved and that nature. So
I've talked to a couple SEC attorneys and real estate and crypto attorneys on this, and essentially the ruling is you got to raise the money, right? And then there is a lockup period because that's an SEC regulation.
Yeah.
So if I go and raise money through traditional syndication, none of the LLC members are allowed to transfer or change in the first 12 months. There is a lockup that the SEC regulates and requires. But as soon as that 12-month period is open, then you can go and sell your share off. And so that's what essentially these attorneys advise me to do is like, dude, you can open it up, give everybody a certain number of tokens. It has to be locked for 12 months. At 12 months in a day, you can open it up. And if they want to sell off 2%, 20%, or 100% of their holdings, they can do that at fair market value, whatever somebody's willing to pay.
Yeah.
So it does create a sense of liquidity to get some of that money back. And so I totally get that. Do you think that's the future of raising money?
I do because at the end of the day, it's whatever you want to do with your money. So if I'm an individual that has just a lot of money, I don't have to sell my assets to give you money. I can borrow against my assets to just give it to you. So now I'm pretty much getting paid, twice on a deal? So if I understand DeFi, I understand Aave, I understand Compound, those crypto banks, I can do that, right? The problem that I see with tokenizing commercial buildings is the liquidity aspect. So if I were to sell it, is it going to be on an open market? Is it like only peer-to-peer? How would that actually work? Because on these decentralized exchanges, there needs to be liquidity on these platforms for us to trade these tokens. Because when I trade Ethereum for USDC on a decentralized exchange, the exchange is getting paid, but the exchange is owned by us. So I'm a liquidity provider on an exchange.
Well, I would think that it creates stability in such a volatile industry if it's backed by a piece of property. So you're like, hey, okay, so we bought this building. It's $5 million, right? It kicks off $500,000 of positive net operating income on an annual basis. So if we don't have any debt on it, and we sell 5 million tokens at $1 a piece, like we all know what the value is, right? It's on the book, it's on the ledger of exactly what this appraised for, or what it's worth, and what the NOI is. Yeah. And obviously, as the income increases, then now it's worth $1.10 per token. And there is, it's liquid in that if you can get somebody else to come in and buy that for $1.10 with something that you could cash out of. I understand that you can't cash out of that exact token, but if you can trade that token for a Bitcoin token and then liquidate your Bitcoin token for somebody who's willing to come in and wants a 10% dividend on this property, then that's I mean, dude, how many people had their money in USDC
Oh my gosh.
and USDT and had all this cash sitting there that was making like 2%, 3%, 5%?
Unheard of.
Because they want something stable.
Yeah.
And they were okay with a return in that realm. Like, I gotta believe that there's gonna be that there is a need for that, right?
There's a big need for it. There's a lot of crypto investors right now that are making a lot of money, but they don't understand anything about real estate. They don't understand the tax benefits behind it. So merging the two is gonna be very beneficial for both parties, because if I'm a crypto investor and I'm making, and I got out of coin very early and I made a lot of money, I don't want to pay taxes on it. What do I want to do? I want to have assets, depreciate, all that stuff, right? I'm not going to know that if I'm not in real estate.
Yeah.
If I just hire a regular CPA, they're not probably going to know that, because they don't know anything about real estate either.
Yep.
Right? So that definitely needs to happen. I think right now real estate and crypto investors, they talk two different languages. That's why there's a huge barrier behind it. They talk two different languages. One talks code, one talks
yeah, brick and mortar. And so I think the other thing is, like, can you get depreciation if you own that token? Is it like stock, or is it not? Like who gets that? Who takes title to the property?
Exactly.
So like there's a few hoops to jump through on how does that work. I'll give you an example. If I go and raise money from self-directed retirement accounts, you got 100 grand in your 401k, and Cameron's got 100 grand in her 401k, and Q's got 100 grand in her 401k. We go buy a building for $300,000, and I'm the operator, and you guys each own 20% of the deal. You get 20% of the equity, you get 20% of the refi proceeds, you get 20% of the growth, you get 20% of the cash flow. But in a self-directed IRA or self-directed 401k cannot take depreciation. It's not allowed to, right? It just there's no use of it. It would just go to nothing.
Yeah.
So me as the operator, I'd be like, well, you guys can't even utilize it anyways.
Yeah.
It doesn't adversely affect you if I allocate it all to me.
Yeah.
So like we're just going to do that. We'd have to figure out, does it benefit somebody on the, like, if they have a token, is it seen as kind of like a retirement account where you can't even utilize that depreciation, or can they offset those gains that they get from the cash flow and the dividends from the from the depreciation of the building? So there's a lot of question marks, and it's going to be fascinating to see how it all shakes out.
Exactly. So that's why it's so innovative, because it's so new. Nobody has the right answer right now. There is no correct answer. It's all trial and error right now.
Yeah.
With all these tokens that's coming out, with pretty much everything, everybody's finding real world problems and trying to solve it.
So is it better for somebody to just sit back and let somebody else figure it out? Or like, how would you see yourself making money over the next 36 months in this industry?
If I was just starting out, or because right now I think I'm a little too deep into it.
Yeah.
But if I was just starting out,
Would you tell somebody to sit on the sidelines, or would you tell them to like invest in a fund, or like how does a new person make money, and then how are you planning on making money?
So for a new investor, I would just have them focus extremely on just appreciation of the token. So focus on Bitcoin, Ethereum. Those are your two main ones, and then also you have indexes, right? So there's metaverse indexes, there's decentralized finance indexes. There's so many different indexes that you can just invest in.
Like a fund of 100 different coins or something.
So a token called MVI is the Metaverse Index. It has the top 14 performing Metaverse tokens in that. It's kind of like the S&P 500, right? So it's only the top performing, and it's all run by algorithms, right? So based on the revenue these platforms are generating, that's how we're going to label it as the top performing, right? So you don't really have to use much brain power. You don't have to do anything.
And that's a DeFi where it's not one person. If you go and invest in that index, there's not one person who could rug pull it, right?
No, this is all code. This is all code. So that's one. There's another one called DPI, which is basically decentralized finance applications. So like Avi, the one I was telling you about, and Compound, those crypto banks. The top 14 performing crypto banks or crypto or financial platforms are going to be in that index, right? So I know a lot of people want to get into the metaverse, want to get into DeFi, but they don't really understand. They have no idea where to start. If you just go into indexes, that's a good way to start, right? There's also an index where it just follows a synthetic coin that just follows the crypto market cap. So right now, the market cap is like $1 trillion. If you are really bullish on cryptocurrency as a whole, you think more money is going to flow into it, that's a good coin to invest in because from 1 trillion, you can go to 10 trillion or 5 trillion or 15 trillion, whatever that number is. Just invest in those coins if you really don't want to use much brain power.
Yeah.
The problem is when you're becoming bankless, most people haven't had that much control in their life. Right. So they're scared of having that much control over their own funds.
Yeah.
They'd rather push it on somebody else. Right. That's the biggest problem that's going to happen. And that's why centralized exchanges.
Because if you push it on somebody else has those coins in their wallet.
Exactly.
And they control it.
Exactly.
So if you and I wanted to partner up and I'm like, hey man, I'm gonna bring a bunch of money and you're gonna trade all day, every single day, you have access to that wallet. You can easily take it and run with it.
Exactly.
Or if we have joint access, you're like, dude, we have joint access. I could take it and I could run with it.
Exactly.
You know, so and that's what you're talking about in this scenario, right?
And that scenario, yep. So I mean, even with something like that, there's something called Gnosis Safe. So Gnosis Safe is basically a multi-sig wallet. So for example, if me and you were to get together, you have finances, I have finance, we both put it into this one safe, we can use that money anywhere we want, right? And we
But
can
you
have
need dual notification in order to take it out?
dual notifications to take it out.
Love that.
Right? So for example, if I wanted to do any transaction, there needs to be 2 confirmations. I wouldn't recommend nobody doing it with only 2 people because it doesn't make much sense. But if you have, let's say 5 people, I would say if you have 3 out of 5 confirmations, that transaction's a go.
Yeah.
Right? People don't know about that, right?
Yeah,
So you can
I didn't know that existed.
So you can literally have like a family fund with all your family members.
So they're solving each one of these problems that have come up with crypto over the past few years. They're all getting solved.
They're getting solved
in a real
every day.
time. Yeah, in a real time basis. So what are you focused on? And we'll kind of close out with this, but like, what are you focused on, really paying attention to over the next 24 months in the blockchain technology world?
Crypto gaming.
Crypto gaming.
Crypto gaming.
Why is that?
I think that's going to take over everything because if you really think about it.
What is crypto gaming? Explain it.
So crypto gaming is basically, like traditional video games, right? So they're trying to incorporate, video games from the Web 2 world into Web 3. So basically people are playing certain video games and earning money from it, right? There's play to earn, there's play and earn. There's so many different platforms that you can utilize to actually earn a living, right? Because when you play.
Because realizing, go ahead, finish.
I was gonna say, because when you play games like Call of Duty, like 2K or Madden, whatever you play, you don't earn anything from that, right? When you have assets on these platforms, let's say you have a cool shirt, it's not really yours, you don't own it, right? But on these platforms, they allow you to sell your assets to do pretty much whatever you want. And that's really what the whole metaverse thing is about. It's about property rights.
So I remember, and we talked offline about this, but I want to make sure everybody was watching. Here's this, but like a couple years ago, I remember reading articles about and watching like videos about this, but like they say that gaming will be the #1 spectator sport in the entire world. If it hasn't already happened, it was a couple of years away or something like that. Meaning, like, instead of sports bars, you're going to go to a gaming bar. You're going to go and hang out and grab a drink, and you're going to watch people playing Call of Duty.
Exactly.
And by watching people play Call of Duty and having eyeballs on that, now they can monetize it. Like the platform can monetize it by selling an Adidas shirt, right, or a Nike shirt, or a Brooks Brothers shirt, whatever it ends up being, and like advertising on there, right? And so there's digital assets and digital advertising and stuff because you have so many eyeballs. So now it makes sense to pay the players to play those actual games.
Exactly.
And you're saying that is going to just keep on compounding and it's going to keep on growing and there's going to be more and more people doing that. And on a deregulated type of a platform, it creates a lot of upside.
A lot of upside
for these gamers.
The biggest problem right now that that they're facing is people are playing these games, but they don't enjoy it. They're playing it to make money.
Yeah.
Right? So when you kind of have that balance of, okay, this game is really fun to play, and I can earn money, boom, right? Because streaming is something that's very big right now. People love watching other people do stuff.
Yeah.
Right? So with video games, once this industry really evolves into what it can become, it's really going to take over because you're earning money playing a video game, and that you're actually good at it.
So how do you get into that?
It's not that hard to get into it. You have to find credible platforms to play these video games. You have to understand what a wallet is. Because
How do you invest from an investor standpoint? Like, how are you planning on making money? Or how can somebody make money with you in that space?
So I'm starting my own capital fund. So basically, I'm focusing on 4 sectors, and my gaming is going to be one of those sectors. So the gaming is going to be one, real estate is going to be another, NFT lending. So people who own like Bored Apes or CryptoPunks, they need liquidity sometimes, but they don't want to sell their assets. So that's another thing about the whole DeFi space. You can literally, if I am somebody who has capital and you are somebody who got in early on a Bored Ape, you can literally go on certain platforms and say, hey guys, this is my Bored Ape. I want to borrow $10,000 for 30 days, and this is the interest rate I want to pay.
And it's like the lending website, whatever the hell it's called.
Exactly. And I can go in and say, okay, I'll give you $10,000, but for 15 days or for 45 days at this interest rate. So it's all negotiable. It's all peer-to-peer. I'm not going to Chase Bank, and then Chase Bank is using your money to lend me money.
Yeah.
I'm going straight to the source.
Yeah.
Right? So that's another platform that I really think is going to change the game. People becoming really their own banks and using their own money as leverage to lend to others. And that's something that people don't know about either.
And there's those safe stops where if the value comes down, there's a liquidity event, and you can still be very, very stable in your lending, even in a volatile industry.
Exactly. But there's a lot of things that are things that you need to be like wary of when you're doing stuff like this, because with crypto, a lot of things can be manipulated to things that it's really not, right? So let's say, for example, I own an NFT. I can make that NFT be worth more than it actually is if I have the capital to do it. Right? If I have 5 wallets, I can literally make any asset, go up in value by increasing the floor price, right? Because I'm essentially just buying it from myself.
Yeah, because you're buying it from yourself in a bunch of different ways.
Exactly. So there's ways that you can really, so you have to be careful when you're doing stuff like this. You have to actually know the industry. That's why I believe you should educate yourself first, right? Because if not, you're going to be one of those people who lose out on a lot of, money by not understanding the kind of the back end of things.
Yeah.
And that's pretty much the biggest problem why people are scared of it, because the user experience right now is the main product for Web 2 companies. Web 3 is the user experience is not where it needs to be for it to be globally accepted.
Yeah.
It's just not.
Yeah.
Just not.
No, dude, I think it's just super fascinating as I have conversation after conversation with people who are in the space on a daily basis, understanding this stuff, and just there's so much opportunity in there. But there's a lot of complexity, at least perceived complexity, from somebody who's not in it on a day-to-day basis. I think whoever can take this industry and simplify it to a who do I write a check to kind of a thing, and maybe and I think the easiest route for that right now is just in a fund, like the one that you're talking about that you're launching, and some of these other, essentially like index funds that you can buy a whole gambit of coins in. Like that's probably the best bet for somebody like me to just write a check, I would think, at this time. But I think there's gonna be more and more and more of this stuff, and I think getting educated on it, and dude, I can't wait for your platform to come out, man, because I'm gonna check it out and dive deep into it, into both your master class and then your full bore coaching program too.
I'm excited, man. I'm excited.
Yeah, man. It's an exciting world to be in, and the good news is you're not buying at the top right now if you do get into crypto, right? That this thing can go up to $70,000 a coin for Bitcoin, and right now you're buying it at 22, 23, whatever it's at today.
Yep.
And so it's like, it's got some serious upside potential, and it's a good place to get started.
I mean, if you really, this is my ending piece. If you look at Ethereum and how much revenue they're generating daily, and look at a regular company and see how you evaluate companies, look at that, and then you can determine how much Ethereum should be worth.
Like price earnings ratio, and you see like Ethereum is worth way more than what it's actually at right now.
It's undervalued significantly. It's making $3 to $4 million a day on a very slow week.
And what's the market cap?
Market cap right now is, I can check really quick. Let's see.
Dude, $3 million a day times
in
3,
revenue.
That's $1 billion a year in revenue.
It's insane.
Yeah.
But people don't really know about that. Market cap right now is at 196 billion.
196 billion?
Yep.
And it's making, yeah, dude, it's and that's net revenue, So I mean, if you take a look at some of these tech companies that aren't making any money, they've got valuations higher than that.
Exactly.
So no, dude, it's a cool space to be in. I'm excited to continuously see it transform other industries, and everything become more efficient, everything be more effective, everything become more true and less murky water, and just to get that nonsense out of the way, and let the free market dictate the value of these things and how things should be run across multiple other industries. So it's
It's
exciting stuff, dude.
It's gonna be a journey for sure, man. I'm excited to be on it.
Yeah, man. I appreciate you, dude.
too,
Thank
man.
you for being here. And just, again, excited for the Legacy Wealth Masterclass to come out. Excited for your coaching program to come out, too. So
For sure.
And, dude, it's going to be a good journey over the next few years.
For sure, man. I'm excited. Let's do it.
You know, every time I watch a video on cryptocurrency, sometimes I walk away with more questions than I have answers. You know, he did such a good job of explaining things to me at a simple level. And I just keep on realizing there's more layers to peel back on this stuff. So I love what Jeff mentioned of like, dude, just go to YouTube University and learn this stuff, you know? Start watching videos, and that's the only way you're really gonna be able to become an expert in this industry, which will be a major, major blockbuster over the course of the next several years and will be mainstream in the next couple of years as well. So I think it's really important if you're on the front cutting edge of this, you know, you're taking advantage of an industry that just is infinitesimal and where it really is in its infancy stages for where it's going to be going. So I think it's really important to get educated on this, on the whole blockchain, not just cryptocurrency, but NFTs and metaverse and all the other stuff too. So go and learn this stuff. Definitely plug into Legacy Wealth Academy and watch Jeff's masterclass as well. Go to lwacademy.com. It's $9.95 a month. It's like so much value for what the price point is, but we're just trying to get information in your hands. If you got some takeaways from this, put them in the comments for me. Tell me what your biggest takeaway was, or if you have additional questions, tag me or put it down below. We will create another video. I'll ask him some more questions or get some other crypto experts on and answer your question for you. And please subscribe to the channel so you can see all the new Spilling the Beans episodes as they come out every Sunday on Spilling the Beans. Appreciate you guys being here. Be your best.